Do you want to know more about the trader who holds the world trading record for the highest one-year stock market portfolio appreciation, gaining over 29,000%? The trader who turned a little over $10,000 into over $42 million. In this video, I'm going to share with you in detail his style of trading that can help you make millions. Hey traders, this is Mike Sir here. I've been an active trader for over 21 years and a trader coach for the past 15 years. In my videos, I profile all the top traders in the world and teach you how to replicate their incredible success. I've been fortunate to train many successful traders, and in this video, I'm going to talk about this extremely successful trader who I have the pleasure of meeting and following his trading strategies. His name is Dan Zanger. Dan is an American trader who profited handsomely during the late 90s in what we refer to as the dot-com boom. This was a time period when the internet was in its infancy and technology and dot-com stocks were super hot. It's kind of similar to the current stage of the cryptocurrency market. During the time period from 1995 to 2000, technology stocks and companies with a dot-com after it went on a tear and made many investors a lot of money. The stock prices in these companies like Yahoo, Amazon.com, eBay were soaring every week. Dan was very aggressive in taking advantage of this rare opportunity to really make millions in the early stages of the internet revolution. So in this video, I'm going to share with you Dan's trading style and show you exactly his trading methodology that allowed him to make as much as $42 million in profits in 1 year. During the late 90s, the internet revolution was gaining traction and marked the turning point in the global economy. More and more companies were using the internet to transform their businesses, and in fact, some companies existed only online. The USA particularly began to experience an economic boom, largely due to the success of web-related or dot-com companies. Due to the excitement of investors about this internet industry, the stock prices of the dot-coms and tech companies soared. Dan focused a lot on these high-flying tech companies, especially the ones that exhibited certain types of price patterns. Dan believed that these patterns kept repeating themselves over and over again, and he liked to look at charts to identify stocks that had explosive patterns. Some of the chart patterns that Dan liked were base formation chart patterns and bull flags. So you can see here in the chart here, this is a horizontal formation. Basically, it's going sideways and then it breaks out here. And you can see here's a flag. This is the pole. This is the low flag here. The buy right here. Here's another flag, consolidation, and then breakout. So essentially, Dan looked for consolidation or sideways movement in prices and then wait for the price to break out of that price range. Now let's take a look at a few examples and talk about the type of technology and dot-com stocks that Dan mainly traded. Here's a chart of Amazon.com between 1998 and 1999. So you can see here in this chart here, basically the price hasn't been going anywhere. It's been kind of basing here, and then it breaks out here, explosive movement up. So this is the base breakout formation that Dan really likes. Here you can also see a flag formation. This is the pole here, and then a consolidation here, and then a breakout to the upside here. There's another flag formation here, and then it basically this movement from here to here is over 1,000% return on that stock. Here's a chart of eBay from late 1999 to 2000. Again, another chart example that Dan likes. So you can see here the stock has made a strong move here. You can see another flag formation. This is the pole. This is the flag consolidation, breaks out. Again, this is a basing breakout fashion. Cannot go above this line here, and then clearly right here, this is the breakout, shoots up explosively. You can see another flag formation here, shoots up, another consolidation here, and then shoots up, another flag formation here, shoots up. So you can see here from the movement here to here is over 700% in the price appreciation of the stock. Now, Dan is known in general as a momentum trader, where he would ride the momentum of high-flying stocks until they stop moving. So let me explain a little bit more about what momentum trading is. Well, momentum trading is a trading strategy of buying and selling based on the strength of price trends. And if there is power behind a price move, either up or down, then it will continue to move in the same direction. So essentially, he's playing the momentum. So if the trend is up, as long as the momentum keeps going up, he will keep buying and keep holding. If there's momentum towards the downside, he will short and keep shorting or holding his short position until that momentum dies. So now let's go over some of the trades that Dan had stated that he had traded and how he had profited from it. So here's a chart of Google in 2004. Now Google just went public at about $100, and Dan started basically buying this stock at around $116. So you can see it started trading here, went up a little bit, and then it basically went down here. So it kind of just consolidated here. So we can assume that he started buying here at around $116, and essentially in a few weeks the stock shot up. It jumped to about $212. So then what Dan did was he actually started adding more shares to a tune of about 180,000 shares at about $220. So we can assume it's around here, and he rolled it all the way up to $300, which is right here. So here's a chart of CMGI Group in 1999. Again, another stock that Dan really liked. And the chart formation that, again, he was looking for is essentially a basing breakout, all right, a base formation. So essentially here, so this stock broke out essentially in January 1999. So Dan bought this stock at about $118, and as you can see here, it shot up. So essentially within 4 days later, the price went up to over $305 for essentially a 210% gain. This stock made millions for Dan. Another stock that Dan really liked was Qualcomm. This is a chart of Qualcomm in 1999. Again, if you look back at this chart here, this chart basically was forming a base, and essentially in November 1999, it broke up very sharply. So Dan bought a significant position upon the breakout here, and over essentially the next few months, he continued to add to that position. So you can see here, again, another consolidation here to buy up here. You can see a flag here, you see another flag here, and again, you can see it all skyrocketed. So these are all three examples or a few examples of the type of trades that allowed Dan to make over $42 million. Dan Zanger has a few golden rules that he follows, and I've summarized them into 7 rules. The first one is must have a chart pattern. So a stock must have a well-formed base or a pattern before you should consider trading the stock. Regardless of what the pattern needs to be, if it doesn't have a pattern that you recognize, then don't trade it. Rule number 2, buy when price breaks out. Buy a stock as it moves over the trend line of the base or the pattern, and make sure the volume is above average once it breaks out. Never pay more than 5% above the trend line. Third rule, set stop loss price. Be very quick to sell your stock should it return under the breakout point. Employ a stop loss rule. This may mean selling a stock that just tried to break out and price failed to keep going in your direction. Rule number 4, take your profits. Sell 20 to 30% of your position as the price moves up 15 to 20% from its breakout point. Rule number 5, hold on to your winners. Hold your strongest stocks the longest and sell stocks that stop moving up or are acting sluggish. Rule number 6, identify the strongest stocks. Try to buy the strongest stocks in the best or hottest sector. This will give you the best gains. And lastly, rule number 7, be careful trading on margin. Never go on margin until you've mastered the markets charts and your emotions, margin can be very dangerous if the price goes against you. Thanks for watching. If you like this video, there are 3 things you can do. First is smash the like button for the YouTube algorithm, hit the subscribe button to watch more videos like this, and hit the notification button so you'll be notified of future videos where I profile the best traders. Second, if you're looking to learn how you can be the next top trader, please go to my website, mikesir.com, to download my free ebook, Become the Next Millionaire, where I profile a few of my millionaire students. Lastly, if you're looking for a mentor and want to learn directly from me, please go to mikesir.com to apply to work with me.